Hey folks, want to come on here and shoot a quick solo episode. This is going to be a follow-up to the podcast episode we did on money. It is about a book that I bought called, it's a bit about how money works. I think I talked about it briefly in the other podcast. And the simplest, most visual guide to money ever. Now, I'll keep this around 15 minutes, I think. I'm not a financial expert, so if you're looking for any sort of advice, probably go to them or reach out in January. But I thought I'd do a little bit about this. It's pretty interesting. Banknotes have existed since 1661. There are 180 currencies around the world. Excuse me. 10% on the world lives in less than $1.90 a day. Crowdfunding has been around since the 1700s. The first old age pension was introduced in 1891. 92% of global currency is digital. Some facts, I think they're facts. They're in the book anyway. The euro, 107 billion of Greek debt was written off in 2012. That's in euro, by the way. $21 trillion, presuming USD, is thought to be hidden in overseas tax havens. And then pounds, 1,311 average worldwide monthly wage. At 3.4 tons, the RAI stone is the world's heaviest currency. RAI stone. Excuse me. The rhinestone were and still are rare important social transactions such as marriage, inheritance, political deals, signed for an alliance, ransom of a battle dead, or rarely in exchange for food. Rai are stone currency from the island of Yap in Micronesia, also referred to as Fei, Fei. They are roughly the same design and come in a wide variety of sizes. Often the biggest rai were used for high value or culturally significant purchases and ceremonies. This is rai, big money, the Bank of Canada Museum. That was just super interesting. Okay, we'll get back to the book. Or just the cover of it here. 2.5 billion adults don't have a bank account. There's 8 billion people. 8 billion primarily refers to the milestone of when the world population reached 8 billion people on November 15th, 2022. 7% the average annual stock market return since World War II. Global GDP has more than doubled since 1970. Super interesting. Maybe it's a good Christmas gift. For those of you in Dublin, Ireland, I bought the book in Dubray, or in Dundrum, in Dundrum. If you're in Dublin, around the country, I think you can probably get it online somewhere. It's by Bull Dundrum, and I think it's by a company. I don't think it's by an individual person. So yeah, about how money works. Let's get into it. I don't want to talk about the whole book, but I'll just go online and talk and get it and chat about bits. We keep around 15 minutes. So just about money. This is ChatGPT. Money is basically a tool people use to trade, to making trade and organizing value easier. We kind of got into this before, so you can go back as a money podcast. Here's a clear and simple breakdown. Why money exists. Number one, before money, people use barter. We talked about that already. Trading goods directly. Just a quick overview. Example, quotations. I'll give you apples if you give me shoes. End quotations. Problem, both people had to want exactly what the other had. Money solves this by acting as a middle step everyone agrees on. Number two, what money does. It's three main jobs. Number one, medium of exchange. You use money to buy and sell things instead of trading goods. Number two, store of value. You can save it and use it later. Bracket, unlike food that spoils. End bracket, unit of account. Prices are measured in money so we can compare value. Example, a bike costs more than a book. Number 3, where money comes from. Most modern money is created by governments and banks. We've got into this a bit. Cash, coins, and bills are made by the government. They have value because people trust they'll be accepted. Bank money, brackets, digital. Most money is just numbers in bank accounts. Banks create money where they give loans. If a bank loans someone $1,000 USD, presuming, or AUD, or euro, or pounds, new money is added to the system. Let's just say USD for the number one economy in the world. So at the moment, I think it has been for a while. But I don't mean to laugh. I don't know why I laughed there. I just had breakfast, so I'm fasting a bit in the morning times. Maybe it's the caffeine. Yeah, USA has the number one largest economy in the world by nominal gross domestic product, GDP, with over 30 trillion USD in 2025, significantly ahead of China, the number 2 economy, and other major, that's in brackets, and other major nations like Germany, Japan, and India, driven by its innovation, strong consumer spending, and diverse service sector. Key facts: rank number 1 globally, nominal GDP. For those of you who just don't know what GDP is, and that's absolutely no problem. GDP definition is short for gross domestic product, is the total monetary value of all final goods and services produced in the country's borders during a specific time, like a quarter of the year, and is the key measure of a nation's, I won't get into economics too much, size and health. That is calculated by summing up spending, consumption, investment, government spending, key exports, or income generated, reflecting economic activity, growth, performance, though it doesn't capture income distribution or non-market work. Gross domestic product, GDP, is the total monetary value. Let's just look monetary definition. Monetary, relating to money or currency. So very simple terms. We're talking about money. Gross domestic product, GDP, is the total money or monetary value of all finished goods. So products and services produced in the country. So essentially a lot of everything, total output, everything produced for sale within the country. And it's an indicator for a nation's financial performance and overall economic activity. All to do with money. Interesting. How banks work, we already got into this. Simple, maybe not. We talked about if the bank loans someone. Number 4, how banks work. Simple. Banks hold people's money, lend out some of it to others, earn money from interest. Your money isn't just sitting in a vault. It's often being used to support loans. Number 5, inflation. Again, I'm not a financial advisor. We talked about that. Inflation, brackets, why prices go up, and inflation. Inflation happens when more money exists, but goods and services don't increase as fast. Result, money buys less than before. For those of you out there that maybe don't know, let's get into inflation definition. Inflation is the rate at which the general prices for goods and services rise over time. For example, a sweet or a pack of, or a book, or we talked about a book, or some headphones. Over time, the price will go up, or a laptop, the price will go up over time. Meaning your money buys less than it used to, reducing its purchasing power. It's measured as a percentage, often using the Consumer Price Index, CPI, which tracks a basket of common items, showing how much more or less, brackets, extensive they've become compared to a year ago. Mild inflation around 2%, brackets, is usually a sign of a healthy growing economy, while high inflation erodes savings and makes things unaffordable. Key aspects of inflation: price increase, a general rise in the cost of everyday items like food, fuel, or housing. Reduced purchasing power, each unit of currency like a dollar or euro, brackets, buys fewer goods and services. Measurement, calculated as the percentage of change in a price index like the CPI over a period, brackets, usually annually. Impact affects consumers by making goods more expensive and impacts businesses by changing costs and demand. Deflation, the opposite of inflation, where prices fall and money gains value. So just to reiterate, inflation is the rate at which the general prices, this is the price of something, for goods, so we talked about a laptop or another product, or services. So it could be, but it could be a personal trainer, just to go on to the longevity economy we talked about last time, rises over time, meaning your money or a sauna, that'd be under product or that'd be under service, depends. Meaning your money buys less than it used to, reducing its purchasing power. We are 10 minutes in, so keep going. So yeah, inflation, we talked about why prices go up. Inflation's happens when more money exists, but goods and services don't increase as fast. Result, money buys less than before. Number 6, how people earn money. People earn money by working jobs, selling goods or services, or investing, brackets, stocks, businesses, etc. and business. Money flows through the economy as people spend, save, and invest. Number 7, why money has value. I think, yeah, working / jobs, selling goods and services. Selling goods and services would be, I suppose, a business, or self-employed, or freelance, or that could be working jobs as well for a salary, or investing, stocks, businesses. Maybe real estate isn't there, property, but maybe you have to talk to an advisor for that. I'm not a financial advisor, to reiterate. Money flows through the economy. So don't base your decisions in January off this. Money flows through the economy as people spend, save, and invest. 7, money has value. Money works because of trust. You trust others will accept it. Others trust the government backing it. The system keeps running because people believe in it. That's super interesting. Why money has value, but money works because of trust. It's all to do with trust. One sec, that's super interesting. One sec. Trust definition. Stop getting into the definitions too much. Trust is a firm belief in I actually got a book downstairs called Trust, which we'll get into it soon. A firm belief in the reliability, truth, or ability of someone or something. Number 2, an arrangement whereby a person, a trustee, brackets, holds a property and its nominal owner for the good of one or more beneficiaries. Yeah, it's a verb as well. So that's a noun. That's number 2 is the law. That's the verb. The belief. Number 1, belief in the reliability, truth, or ability of. Number 2, allowing credit to, brackets, a customer. Interesting stuff. Let's go on Gemini. Google. Don't want to go too much into the book at the moment because it's by DK, by the way, in case anyone's wondering. See, if those of you who are on YouTube, watch the video on Spotify. That's what it looks like again on the top right, DK. Okay, this is separate from the book though, I thought I'd add on some of what's in there. You already talked about this. Go to Gemini for a sec. You used to work in Google, so it makes sense. Me using ChatGPT, Gemini product. Money is just more than paper or numbers in an app. It's a social tool designed to solve the problem of trade. We already talked about this. Historically, if you had apples or wanted shoes, you'd find a shoemaker who specifically wanted apples. Money acts as a middleman, quote-unquote middleman, that everyone agrees to accept based on trust. Here is, it doesn't say trust, but we already talked about trust previously, so we'll see what it says. Here's a breakdown of how it works in the modern world. Number 1, the 3 jobs of money. Economists define money, what it does to work effectively. It must fulfill 3 roles. Medium of exchange, we got into before, an item that buyers give to sellers when they want to purchase goods or services. It removes the need for, quote-unquote, bartering. Unit of account, a yardstick people use to post prices and record debts. It allows you to compare the value of a burger, $10, brackets, presuming USD, United States dollar, to a car, 30,000 USD, easily, brackets, easily, yeah, ends brackets. Store value, something that keeps its purchasing power. We talked about purchasing power over time. Let's just define it real quick. purchasing power. Probably learned about this in the junior cycle or senior cycle a bit, just in university. Just get into too much. Purchasing power. Parity PPP is an economic theory and metric comparing currency values by determining the exchange rate needed to buy the same basket of goods and services in different countries, revealing true purchasing power beyond. Yeah, interesting. Is an economic theory and metric comparing currency values by determining the exchange rate needed to buy the same basket of goods, or products, or services, or basket of goods in different countries, revealing the true purchasing power beyond market rates used to adjust GDP for better living standard comparisons, and indicating if a currency or over/undervalued is based on the law, quote unquote, law of, I don't study economics, I did in school, but or I did in college for a bit, but law of one price. I know you can check out the David McQuillan's podcast. He's an Irish person with a lot of history, or he works and he writes about economics. This podcast is about it as well, so I won't get into too much, but accounts for price level differences, tariffs, and costs, showing that a dollar should buy the same amount everywhere, though real world data often differs from market rates. I think that's it. We're on 16 minutes, so we'll go a small bit over. Again, no one's mentioned it to me to keep it under, so. Yeah, we got into this. 3 jobs of money. Money of exchange. An item that buyers used to sell and that give to sellers when they want to purchase goods and services. It removes the need for bartering. Unit of account, a yardstick people use to post prices and record debts. It allows you to compare the value of a burger. We already got into this. £10 to a car, or $10 to a car, $30,000 easily. Store of value, something that keeps its purchasing power over time. If you earn $100 today, you can hold on to it and buy $100 worth of goods next month. Number 2, why does fake money have value? Interesting. We already talked about this in the last podcast. In the past, money was commodity money, gold, silver, or salt, which had value because the material itself was useful or rare. Today we use fiat money. We talked about this in the previous podcast about money, which I'll maybe just briefly go to the episode. I think it's in the 20s. You can go back and check if you want. Bracket fiat is the Latin for let it be done. In brackets or quotations, let it be done. This money has no intrinsic value. A $100 bill USD is just paper, just say dollar, but it works because, number 1, government decree. The government declares it legal tender for all debts. Quotation marks and legal tender. Taxes, you are required to pay taxes in a specific currency, which ensures everyone needs to obtain it. Just for 1 sec, legal tender. Legal tender is official currency, coin, and banknotes that a government declares must be accepted for paying debts, extinguishing a monetary obligation when offered through businesses can often set their own rules for payment for goods and services unless local law dictates otherwise, making it vital for debt settlement but not universally mandatory for all transactions. It is the standard medium for settling debts, meaning a creditor can sue you for non-payment if you offer legal tender, even if they refuse it for, say, a new purchase. Hope that makes sense. In simpler terms, if you owe someone money, brackets a debt, offering them legal tender is a legal valid payment and they can't claim you haven't paid. If you're trying to buy something new, a shop can usually set its own payment rules, e.g., no $100 bills, card only. Super interesting. Where are we now? Yes, taxes. You are required to pay taxes in a specific currency, which ensures everyone needs to obtain it. Trust. Most importantly, it works because you trust that the grocery store will accept it from you tomorrow. How money is created. Most people think the government prints all money. In reality, physical cash is only a tiny fraction of the money supply. Central banks, the Federal Reserve in the US and the ECB in Europe, European Central Bank controls the quotations, monetary base, end quotation. They create end quotation, money electronically to buy government bonds, which we talked about a bit, which puts money into the banking system. Commercial banks, this is where most money is actually born. When a bank gives someone a loan, brackets, like a mortgage or a car loan, end bracket, they don't necessarily take that money from someone else's savings. They credit the borrower's account with new digits. This quote, start quote, new, end quote, new money enters the economy as the borrower spends it. I'm kind of laughing there because I keep saying quote. I don't know. For the rule of inflation, money works best when its value is stable. If a government prints too much money, there is cash chasing the same amount of goods, causing the prices to rise, inflation brackets. If money loses value too fast, people stop trusting it as a store of value, quotation, store of value, and try to get rid of it as quickly as possible, which can lead to economic collapse. So just type of money, commodity, gold, cigarettes. The item itself is rare or useful. Very good. Representative gold standard notes can be traded in for, or maybe a Lost Mary. Representative, yeah, or Vivo. Yeah, we won't get into that. Maybe representative gold standard notes can be traded in for a physical commodity. Maybe Lost Mary's kind of, I don't know. Anyway. Behind the times. Fiat, US dollar, euro, government backing and public trust, digital/crypto, Bitcoin, mathematical scarcity and decentralized ledger. So the one thing to know about money, we can go back to the figures at the very start, which is super interesting. We've already talked about, and there's no source here, but with DK as a source on how money works in the book. It says 10% of the world lives on less than $1.9 a day. Just kind of mind-blowing. But yeah, this is a good one to finish off on. I want to talk about this concept for a while. It's on Gemini and Google. If you learn only one thing about money, let it be compound interest. Albert Einstein reportedly called it the quote-unquote eighth wonder of the world, end quote. And it's for good reason. It is the primary engine that turns small, consistent savings into massive wealth over time. Again, I'm not a financial advisor. Please contact that person if you're going to talk or do anything about money. The snowball, start quote, end snowball quote effect. So the snowball effect, compound interest is the interest you earn on your original money plus the interest you've already earned. Unlike simple interest, which only grows your initial deposit, compounding creates a quote, snowball effect, end quote. Imagine you have a small snowball at the top of a hill. As it rolls, it picks up snow, and now that it's bigger, it has more surface area to pick up even more snow. By the time it reaches the bottom, it's a giant boulder, not because you've added more snow by hand, but because the snowball did the work itself. Why time is more important than the amount? The most shocking part of compounding is that when you start matters more. When you start matters more than how much you invest. This is about investing, so we'll stay away a bit, maybe not. Early saver, start age 25, monthly save, $200, or let's say euros, total saved, 96,000 euros or dollars, just say euros for Irish context. Result at age 65, 400,000 euros. Late saver, and that's Mary. We got a John, 35, start age, monthly save, 400 euros, total save, 144,000 euros, result at age 65, 400,000 euros. Note, assume a 6% annual return. Even though John has saved twice as much per month, he has ended up with the same amount because Mary gave her money 10 extra years to quote-unquote snowball. The two-sided blade. I don't know if anyone's listening out there, if they find that this is kind of going over their head, I may be the same boat as you, so even though I understand what they're saying, I just thought I'd mention it. Maybe not. Maybe it all makes sense. Maybe I just need some lunch. It's now 4 p.m. The two-sided blade. Compounding is a neutral force. It doesn't care if you are the one earning or the one paying. Number one, when it works for you, it builds wealth. Savings, 401ks, stocks. When it works against you, it creates debt traps. Credit cards compound your debt, meaning you can end up paying interest on your interest, which is why small balance can feel impossible to pay off, even if it's only the minimum amount. The rule of 72, this is not one thing, this is multiple things. To see how powerful your interest rate is, the rule of 72, divide by 72, your interest rate, to find out how many years. Yeah, I don't know. It's all kind of a bit complex. It's all into investing. But how many works? This Christmas, I just like to note that, especially when there's a lot of fundraising going on and there's people out there that may need cash or may need money in different parts of the world, not just in Ireland, or Dublin, Ireland, which you talked about being one of the wealthiest places in Europe. Not everyone has it in Ireland, so if you see people on the streets, maybe any homeless out there, or if anyone's suffering that you can, feel free to maybe give them some money. Talk about how money works. We already mentioned that 10% of the world lives on less than $1.9 a day. So yeah, I think it's interesting, kind of how money works. Yeah, it's one sec. We've already talked about the one thing about money, but just try one more time. Sound a bit expansive, but let's get into it. Yes, here we go. This is what I was looking for. One important thing about money is it only works because people trust it. Money itself, paper, coins, or numbers on a screen, doesn't have much value. It has value because everyone agrees to accept it to buy things, pay workers, or save for later. If people stopped trusting it, money wouldn't work anymore, which is dangerous, but also it is so important to note that people do trust each other, and they do trust in money, so it works. So that's kind of how money works, by trust. Thanks for listening, folks. And again, I'm not a financial advisor. Please go to one or bank if you're making decisions based off this podcast, and have a wonderful rest of your day.